Oh, g'day. It's Lockie. You're, whoops, there's a mic stand there. Your Aussie trader and fund manager. It's been a while and there's been a lot of pretty exciting stuff that's been going on in the background that I can hopefully share with people over the next few weeks. And a part of that includes quitting my full-time role to pretty much just YOLO it, go full send on fund management. But for today, we're going to go over some of the MyFX books results and discuss them openly because really it's something that I don't think people do enough. So without further ado, let's just dive into it. Here we are, we've landed in MyFX book. If no one's heard of them, go check them out. They're a really good piece of publishing kit and you can verify your own trading results, publish them, let other people view them or keep them private if you want to track your own data. Do ignore these ads. I've never heard of DNA markets before, not sure how they go. Maybe you guys have heard of them. But for this one, the Crown 2 that I've got is the master account that I've got for the portfolio, and this distributes all the signals through various bits of infrastructure to other accounts, whether that's my own personal accounts, Darwin X, prop firms, FTMO, fund management accounts. This is the one, and it's nice and easy having a single master account, just distributing to others through copy traders, makes everything nice and clean. But this portfolio, the Crown portfolio, it was generated a little bit before February 2024, but I've had it running on this account since then. So this is when we've got the tracker going from. And to date, it's landed at 149% for 9.4% drawdown. And it's been behaving pretty consistently ever since. And the risk on this has been back calculated by design so that it ideally doesn't breach 12%. It might breach higher than this in the future. The largest drawdown's always ahead of you. But to maintain institutional level risk tolerance on this account, I've tried to control the risk so the maximum expected drawdowns land at about 12% at any time. So if we go down here, total trades over the portfolio duration so far has been 2,206. So it's starting to get a decent sample size going for its forward testing. And we're at a 42-43% win rate, which matches the out of sample data in the testing. So it's all, the portfolio itself is in line with performance through all its testing, and it's so far done quite well. Profit factor of 1.26. Don't know what's going on here with the sharp calculation. 2024, quick review of the results, had a pretty good year. I think it landed at 38%. Someone else can do the quick maths on that because I sure can't. But it was a pretty stable year all around compared to 2025. So here's the 2025 results. March was really painful. Man, I remember that quite distinctly. I think March had a period of time where it was down at, this was the 9% drawdown month, and then it pulled back to close at negative 6.45. But this is the nature of trend following. You're going to have these extended periods, weeks, potentially months, where you just have loss, and it can get quite draining. But you've just got to know that that's the nature of the beast. You have to get through these periods of extended losses and wait until the markets become favorable. And often it's very quick that you'll end up returning to all-time highs. It only takes a couple of big winners for those little losses to be completely wiped out of the water. And very fortunately, that's what happened here in March. So it turned around quite quickly and had a bit of an unstable June and then closed out the year strongly. And then so far for 2026, we're on for a banger. So we've already got almost 20% for the year so far. January was 12, February 1, March -1, and April we're at 7. This account doesn't include a recently launched crypto system, and that crypto system's also done very well so far for April. So this is a little bit underrepresentative. So I want to go into a bit more of a breakdown of that March 2025 drawdown because a single bar doesn't really give an idea of the pain that we go through as trend followers. Emotional damage! And if you are going through pain at the moment and you're hitting strings of losses, don't worry, you'll probably get out of it sooner rather than later with the way the world's working at the moment. A single tweet from our good friend Trumpy, and you might be out of your drawdown into heavy profits before you know it. So keep ploughing on. It doesn't take long. Building up lots of little losses in a row. It is painful, but we participate in the market for those big wins, which will just obliterate those losses and get you back to all-time highs. So I'll just go and do a quick custom analysis on that March 2025. So we'll dive up in here, custom analysis, do a quick filter for, let's go late Feb to Yada da, March. Let's go early April. Let's go 7th of April. Analyze. And you can see here the equity chart really looks quite fugly. Just nearly every day was a loser. 4 consecutive days there. Consecutive weeks really of just losses. And then into April it does pull out. So we've pulled out of that drawdown since this period. But if we go into the breakdown of the history and just look at it sort of on a day-by-day basis to zoom in, you can see there's lots of strings of losses and they're really not broken by any big winners. A lot of these trades are full stop outs, which really shouldn't happen too often. So the systems that I've got going have a full stop out that wipes out about 0.4% of the account balance per trade. These two, for examples, are full stop outs. This one isn't. We've got some small wins in here. That's a full stop out. We'll go back a few pages just to look at the pain, because I know what people go through. It's not fun. This is a nasty period. So 28th, 27th of April, 1, 2, 3, 4, 5, 6, 7, 8 in a row. A few small winners. There's another 3, 4, 5, 6 losses there. And it just doesn't really end. But that's the nature of it. Just hang on tight. And these small losses, they won't, oh yuck, look at that. Nasty. They'll eventually be cleared by that one big winner, which you will hit. So something else that we can do while we're floating around in my FX book is have a look at the breakdown of performance by instrument. So what I'll do is I'll dive into custom analysis and pull out 2025 again. So we'll go January 1 to December 31, 2025, analyze. And here's the equity curve. What I should really be doing here as well is toggling on the drawdown to give an idea of the maximum drawdown that was experienced. So it was 8.8% for that March period and a bit of a drawdown period as well going to May, June. But if we go down here into summary, we can have a look at the instrument breakdown. So you can see Euro USD was not profitable for the year and a lot of the profit came from gold. So I'm sure everyone's on top of that massive gold bull run that's happened. So that carried the portfolio for the year, plus NASDAQ. NASDAQ's always fantastic. And this highlights, I guess, the difficulty of currency pairs. Currencies are really hard to get anything out of, and they're the last thing you want to be working on. The systems that I've got for currencies are extremely robust. They perform on upwards of 20 other markets. Their performance is widespread, but the performance in terms of profit is not that substantial compared to indices and gold. So they are worth running. In the case of 2025, they actually ended up in a negative. We're in the green so far for currencies for 2026. They carried January. But you do really be wanting to work on the most efficient instruments and the most volatile instruments first and diversifying out within those before even considering looking at currencies. So be a specialist and focus on what works first and don't be someone that diversifies into everything, because I'm of the opinion that that will stack the odds against you and you really want to be working on going down the path of least resistance, which is working and sticking in with what works in terms of volatility, and that is your indices and your gold. So there's not really too much more I can point out that's useful to you guys for now off the main portfolio. I can give a squiz of the incubation account. So let's dive into Crown 3. So this is a backup portfolio that I've had running since a similar time period, and it keeps tabs of reserve systems. So this is a portfolio of backups. They are running at triple the risk, so you can see that it's obviously quite a volatile equity curve, and those systems are not optimized with their correlation at all. So there is a fair bit of correlation going on between those. But so far since then, it's done pretty well. This incubation account, it's tripled itself, and it's not going to be too far off. Maybe another year and a half, and we'll get it to $1 million balance, which will be good fun. But for now, I've recently launched some systems of this. They're actually live as of today, and it's a bit of a side project I've had going for a while, and that relates to generating systems that are optimized for prop firm performance. So do keep tabs on the performance on Crown 3 incubation account, because there could be some interesting things coming through on this, and I might be able to give some more insights onto those prop firm systems down the track for those that are interested in going down the prop firm path, which it is worth doing. FTMO is awesome. So that'll do us for the performance review late performance review really for 2025. Plus we went into a little bit of 2026. For those that are just stumbling upon the channel for the first time, this portfolio has been generated through a piece of software called Strategy Quant X, and it uses machine learning technology, which is a subset of AI, to brute force systems together and try and create a portfolio of completely automated systems you don't have to know how to code that can, over time, rip money out of the markets for you, hopefully. So this is something that's possible, and I hope other people can replicate or do better than this and launch their own systems on, say, Darwin X, their own managed funds, prop firms, or even external managed funds, and really scale it up because it is infinitely scalable, and that's really where the excitement comes from for all of this. See how far you can take it yourself. If you got something out of this one, hopefully there were some little insights in there that might be beneficial to your own system development. Then don't forget to drop a like and subscribe and jump into the Discord channel. I'm happy to answer any questions that anyone has. Just throw them out there. There's a lot of people that have got similar experience in the Discord channel as well that can happily help. Until next time, bye.